Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1439A, and today's date is December 4th, 2017, and the title of the episode is Central Banks Are Worried That People Will Realize They Are Obsolete. Let's get into the economic collapse financial news. Now, it looks like Wall Street wants to get involved with cryptocurrencies, and of course, they always go in a different direction where they like to create derivatives, which are bets on bets on bets, and it looks like this is what they're doing with Bitcoin right now. Now, the CBOE Global Markets said that on Monday it would begin trading its Bitcoin futures contracts, known as XBT futures, and this is supposed to start on December 10th. Now, both exchanges are hoping that rising interest in cryptocurrencies from Wall Street traders will help drive the demand for its new derivative products. And we can see there are still traders out there, and those people that are in the crypto market, they're not too happy about what is happening with this. We also see out in Venezuela that Maduro is looking to completely bypass the dollar. Now, they were talking about using the yuan, the petro yuan, to trade oil, and he's thinking about coming up with a cryptocurrency which would be backed by oil reserves, and they would be calling it the petro. This way they'd bypass the dollar completely. And if you notice, there has been a pattern where countries are out there and they're trying to do whatever they possibly can to bypass the dollar, and more countries are doing this. Now, what's very interesting about the crypto market, I mean, it's going up and up and up, and many people are saying it is a bubble. Maybe we are approaching a bubble, and we can see there are many countries that are jumping on the crypto market. Many people are jumping on the crypto market. The central bankers, they're a little bit worried about the crypto market. This is why they're trying to create laws where they're saying that they're going after those individuals that have more than 20,000 in Bitcoin. They want to tax those individuals, and they're trying to regulate it as best they possibly can. Now, remember, the crypto market, the blockchain system, and there's many cryptocurrencies on the blockchain system, well, they're completely on their own. You don't need a central bank. You don't need a bank. You don't pretty much need anything. But I noticed that the corporate media, like Bloomberg and many others, they're out there saying, well, if central banks can issue cash, they can issue cryptocurrencies. Now, the question is, why do we need a central bank issuing a cryptocurrency? There's no need for a central bank to issue a cryptocurrency. This is what the central banks are worried about. They're worried about cryptocurrencies growing and people realizing that the central banking system is completely obsolete. And actually, it is obsolete. There is no benefit to a central banking system. How can there be a benefit to the people if it's a private corporation? They create the currency out of thin air, just like cryptocurrencies, and they loan it to governments with interest. Cryptocurrencies, there's no interest attached. And there's no cap on how much they can create. And we can see throughout Europe, look what happened to Greece, look what's happening to France, Spain, and the rest of the countries. They're being put into debt. And eventually what happens when the debt level gets very high, they have to push austerity. Here in the United States, the Federal Reserve just keeps on creating the currency. There's no end. And the government officials, they just keep borrowing. And what does that do? Well, it creates more and more debt. And the situation just gets worse and worse as time goes on. And as we can see, the central banks, this is one of their biggest worries. This is why they've been trying to get into the crypto market. This is why they're trying to create their own coin, saying they can stabilize it. But they don't realize and they don't understand is that the people around the world who deal in cryptocurrency, they understand that there's no reason to even deal with a bank or to have a central bank manage this. What's very interesting, I was out and I heard people talking about Bitcoin, and it's the younger generation. I'm older. I'm 52. I heard younger individuals, they must have been in their late 20s, early 30s, and they were talking about Bitcoin, which is very surprising. And they were talking about how you don't need a bank, how you can use Bitcoin or the other cryptocurrencies to pay for items, where you can use the cryptocurrencies and receive it as a salary. And there is absolutely no reason to use banks at all. And I believe what's happening right now is the younger generation right now is looking at this saying, there is absolutely no reason we need a central bank. We need a banking system. Everything can be handled right from the level of the blockchain. And that's that. And they were talking about it, how much they've purchased already, how high they think it's going to go. And we can see already that as we move forward, well, there's going to be more people talking about this and more people getting involved, more people understanding this. And this is what the central banks are very worried about. We see it out in the retail industry, and I'm talking about the brick and mortar stores. We understand that there's a lot of problems there. Sales have not gone as well as the corporate media, as the government is letting everyone know. Actually, sales are terrible. Traffic to the stores is awful. And you have to remember, Amazon only represents 3%, yes, 3% of the overall U.S. retail sales. So when they try to make it a really big deal that Amazon is taking over the world with retail, it's 3% of U.S. retail sales. So there is no Amazon effect. It was made up to convince you of why the retail market was collapsing. You know, there are 170,000 fewer retail jobs in 2017. And no, they didn't all go to Amazon. A very, very tiny percentage went over to Amazon. Tiny, minuscule. The rest of the people have no work. Or maybe they found a work in a restaurant if they're able to do that. Or maybe in another retail store. But we can see right now that there are many jobs being removed from the industry because what do we have? We have bankruptcies, we have stores closing, and the traffic to retail stores is dropping. Purchasing of retail is dropping. They don't want you to know this because they want you to be convinced. They want you to be convinced that everything is fine. Actually, U.S. factory orders have slid in October. They've declined. And we see right now they are busy revising all the numbers. Now, October factory orders declined by negative 0.1%, and they were revised upward in September from 1.4% to 1.7% month on month. And durable good orders were also revised higher from their preliminary print. It was down by negative 0.5%, and they made it to a 0.3% gain. So what they're doing is they're very busy manipulating all the numbers and making sure people believe that everything is fine. Well, the manipulation is going to come to an end because when people don't have jobs, when people aren't purchasing in retail, and they can't say, oh, it's the Amazon effect, they're going to run into trouble. They ran into trouble where they used to blame it on the weather. Oh, retail's not doing well because it snowed in the Northeast. Well, what about the rest of the country? Oh, well, retail's not doing well because it rained or there was a hurricane in Texas. Well, what about the rest of the country? And this they can't use anymore. The Amazon effect, that will come to an end. People will start to realize that that is fake, phony, and false also. We see that the bubble watch is still going on. And we need to understand that this everything bubble, it is a bubble in sovereign bonds. It was created by the central bank attempting to corner these markets via ZIRP and QE. Now, because sovereign bonds are the bedrock for the current fiat financial system, if they go into a bubble, everything goes into a bubble. Now, back in 2008, more than 80% of non-financial corporate bond issuance was rated A or above. In the past 5 years, the proportion has been consistently under 60%. Now, what does this mean? This report is telling us that even in 2008, a period that everyone admits was a disaster in terms of debt, corporate bonds were less risky than they are today. That means the average corporate bond is riskier than before. At the same time, the reforms that followed the crash of 2008 mean that banks have to hold more capital. But this also means they are less willing to devote capital to market making. So as a result, the bond market is less liquid than before, so investors in corporate bonds are holding riskier, less liquid assets, which is worse than 2008. And we can see that things are really starting to deteriorate. It's getting worse and worse as we move forward. Now, for the first time in modern history, U.S. government debt will surpass household debt. Now, this is just unbelievable. The federal government liabilities increased almost 150% over the same period and nearly reaching household debt levels for the first time in modern history. This tells us that things are out of control. It tells us that the people cannot take on any more debt. They're at their max. The government has to continually take on more and more debt. It needs to take on more debt because it has to pay for all the programs. It has to pay for the wonderful health insurance that the government has. It also has to pay for their salaries. It also has to make up for the declining tax receipts that the government is receiving. There's also interest on the debt. And as we can see, going back in time, well, the debt keeps on rising. It's not going to end. Actually, it accelerates when these things all happen. And that's what we've been seeing since 2008. Now, something very interesting. There was a new report that came out, and it says that the Fed has no reason to keep raising interest rates. They're saying that there's no reason for the Fed to raise interest rates anymore. Well, we know why they're saying this, because if they start raising interest rates, guess what? The housing bubble pops, the student loan bubble pops, the auto loan bubble pops, the bond market bubble pops, the stock market pops, everything feeds into everything else and everything comes down. So now they're trying to make this case of why the Fed doesn't need to raise interest rates. Now, this is coming from a former Fed official. He's an economics professor at the University of Rochester, and they're creating this report to show that there is no reason for the Fed to do anything. Now, the report says that the Phillips curve is actually more like a cliff. It remains flat as long as the actual output of the economy is below its potential output. Once the output gap closes, inflation will spike upward, and this is when the Fed should raise rates. So the Fed is doing the opposite of the appropriate policy at the moment, he said. Instead of gradually raising rates, the Fed should see how long it can make the unemployment rate go. This might spark a virtuous circle, getting more people involved in the labor market and spark more demand and capital investment, which in turn leads to more jobs. Well, no. The unemployment numbers are fake. They're phony. People aren't getting the high-paying jobs. They're getting jobs in retail, which now they're getting laid off. They're getting jobs in restaurants where the foot traffic is slowing down and the restaurant performance benchmark is declining right now. And what is happening is we have no manufacturing, or very little bit of manufacturing, and there are no jobs in the U.S. They're service type of jobs where someone sits behind a gray cube with a computer and answers emails all day. This is the major problem. And the major problem is that most of these statistics that are coming out of the government, out of the Fed, they've been manipulated to make everyone believe that everything is great. And they're trying to make the case right now of why the Fed doesn't need to raise interest rates, because if they start raising interest rates, the whole thing just comes completely down. And they know this, and they can't do anything because everything will be blamed on them. So they're trying to push this off as far as they possibly can. And while this is happening, and again, anything could, make this go completely implode on itself, we see the actual economy, well, it's imploding. retail, factory output, the tax receipts coming into the government, the health insurance industry falling apart. It's all falling apart all at the same time. And they're having trouble trying to keep it all together. And as we move forward, it's going to accelerate. As we move into 2018, it's just going to get worse. And anything can kick off this collapse. And this is what the central banks are very worried about. And this is why they're trying to figure out a way to keep everything the way it is right now until they can create some type of distraction where people say, look over here, it wasn't us. And this is what they've been putting off. And they're trying to figure out a way to create this distraction. And this is something that we all need to watch. And we can see that they're trying all different ways. But I think what's going to happen is we're just going to head into this collapse and there's going to be no distraction. And this might be the chance where the people can say, listen, we don't need the central banks. We have cryptocurrencies. We don't need the central banks. They do nothing to benefit the people, not just here in the U.S., around the world. They do nothing to benefit the government. Actually, it makes the government corrupt because there's so much free money. There's just money created out of thin air that government officials think that they can do anything. If there were checks and balances and you had to balance the books and you just couldn't create currency, give someone a credit card and just spend, guess what? You would have less corruption. You would have less problems in government. The central bank is the root of all evil. It all emanates from there. And it just gets worse, but they don't want you to know that. And this is why we need to do away with the central banks. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.